Hi there, you're watching Market Cafe on ET Now with me Shreyansi Singh, and with me as always is my co-anchor Snehisha, and over the next 1 hour we take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar bright and early this morning, and tell you what the brokerages are saying as well. But first things first, Snehi, we've got to look at the handover coming in from Wall Street.
Absolutely, and rather flattish coming in from Wall Street. You have a slight bit of a pressure being seen on the European indices as well. Hi there, good morning. Let's take a look at what the global handover looks like. First up, from the US markets from Wall Street, stock futures hovered near the flat line as traders looked ahead to minutes from the Fed Reserve's latest policy meeting, seeking further insight into the prospect of an interest rate cut. Now remember, on the spot basis, stocks are coming off a losing session, with both the S&P 500 as well as Nasdaq snapping their longest winning streak since late 2023. The broad market S&P 500 yesterday dipped 0.2%, Nasdaq also slid almost 0.3%, and Dow was lower by almost 0.1% as well. So nominal drops coming in along all of these three indices, but well, yes, all of them have ended the day in the red. Along with minutes from the Fed's July meeting, Wall Street anxiously also awaits commentary from central bank leader Jerome Powell. Remember, the Fed chair is expected to deliver remarks on Friday at the Jackson Hole Symposium, and he could provide further clues into the Fed's next rate decision at its September gathering. On the earnings front today, traders will be keeping an eye on quarterly reports from TJX companies, Target as well as Analog Devices. While this is the handover coming in from the US markets, let's also take a look at what the bonds are doing. The US bond, the yield on the 10-year treasury has slid nearly 5 bips, sitting at 3.818% as of now. So that's what the bond yields are doing, and dollar index has also softened nominally to 101.4 as of now. So this is what the US markets are largely looking like. Shifting focus, let's also take a look at what the European markets did yesterday. And well, it's a red across the screen because you have DAX with a cut of 0.3%. FTSE, however, was the major loser when it comes to the European indices, underperformed the European markets because FTSE was down about 1% in yesterday's trade, deep under pressure yesterday. Overall, Stock 600 also 0.5% lower, so a slight bit of a cut coming on that front as well. But well, you have this Sweden Central Bank, they've gone ahead and cut rates, so this is going to be a key development to watch out for as well. And overall, well, yes, European stocks have closed lower, but largely this is a handover coming in from the US as well as European markets. But while Shreyansi, this was on the equity front, tell us what commodities are up to.
Well, absolutely. So when you take a look at oil, you are seeing a slip coming in there, but it's gold that's really sparkling bright. But firstly, let's take a look at US crude oil futures. Then fell to roughly $74 per barrel after selling off in the previous session amid demand worries in Asia as well as ceasefire talks in the Middle East. Now, US crude and Brent prices have fallen 9.2% so far this quarter. So that's the kind of move that we have on a quarterly basis. Let's also take a look at the moves yesterday. The WTI September contract, that was around those $74 a barrel level, and when you take a look at the downtick coming in, 33 cents of a downtick coming in, or 0.4% downtick coming in for WTI, and year to date that contract has gained 3.2%. So that's the kind of moves that you've seen for WTI. Switching focus to Brent, then October contract around $77 per barrel, downtick of 46 cents or about 0.6% coming in there as well, and year to date that contract is also flat or up just about 0.2%. So that's the kind of moves that we've seen for Brent as well. Now, US Secretary of State Antony Blinken is in Middle East, where he is making a renewed push to reach a ceasefire deal in Gaza as well as return hostages held by Hamas. Now, Blinken also said that Israeli Prime Minister Benjamin Netanyahu had accepted a bridging proposal and called on Hamas to do the same as well. So that's the kind of backdrop that all of this comes against. Now, oil prices have pulled back as Iran has also refrained so far from attacking Israel in response to the assassination of a Hamas leader in Tehran in late July as well. So that's also something that we've seen playing out for oil prices. And the US also hopes a ceasefire deal in Gaza can prevent a wider war in the region. So that's largely the backdrop that the market is looking at. But like I said, it's gold that's shining bright because gold prices extended their record run, holding firm above that key $2,500 level, driven by a weaker dollar as well as growing investor confidence that the Federal Reserve will be likely cutting interest rates in September as well. So when you take a look at price movements coming in for gold, spot gold rose about 0.1%, but was still around those $2,500 per ounce levels after hitting an all-time high earlier in the session. Now, gold, which tends to thrive in a low interest rate environment, has also risen more than 20% so far this year and is headed for the best year since 2020. So it's been both a good day and a good year for gold, Snehi.
Absolutely. On that note, let's also take a look at all the important events to watch out for in today's trade. Lots happening in India as well as globally. So let's take a look at what this list looks like. From the US, like we mentioned earlier, you have the FOMC minutes to look forward to, and the API weekly crude oil stock data will also be out. And amid all the volatility that Shreyansi mentioned that's going on with crude, this is going to be an important metric to watch out for as well, especially on the gasoline front too. Shifting focus to Japan, you also have some trade data coming out, so watch out for that as well. But let's talk about action back home then. On the corporate action front, you have lots happening. Watch out for TTK Prestige because their QIP is opening today. Procter & Gamble Health earnings will also be out today. It's also the record date for Symphony share buyback today, so watch out for that. Also the last day to be eligible for dividend to buy a lot of shares, and this list has names like Engineers India, HAL, Gateway Distillery Parks, Credo Brands, Pfizer, Symphony, KPI Green Energy. Lots of prominent names coming in on this list today. It's the last day to buy the shares of all of these companies to be able to be eligible for their dividend. In terms of the primary markets, the Interarch Building Products IPO will be closing for subscription today. Today is the last day to do so if you wish to. And Orient Technologies IPO will be opening for subscription day one of that IPO. So watch out for all the action in the primary markets as well. Lock-in period is ending for Vibhor Steel Tubes. 55% equity comes out of lock-in. And also today you have the Fed Vice Chair Michael Barr. He is all set to speak today. This is ahead of Fed Chair Jerome Powell's commentary on Friday. So well, keep a close eye on any commentary, any hints about a rate cut, the quantum of the rate cut. All of these are going to be important indicators to be watching out for in this speech today. But well, yes, that's all the important events to watch out for in today's trade.
Well, absolutely, and it's commentary coming in from the Fed that will take the spotlight. And ahead of key takeaways from the Federal Reserve minutes, Governor Michelle Bowman also said that she remains cautious about any shift in the central bank's policy because of what she sees as continued upside risks for inflation, warning that overreacting to any single data point could jeopardize the progress already made. In fact, the central bank official also continues to maintain her hawkish stance with little to no indication towards endorsing a September rate cut as well. Now, inflation should continue to fall under the current stance of the policy, and that is the word coming in from her as well.
Well, the news about MPOX has been making the rounds, and if you're scared about that, here's some relief for you. MPOX is not the new COVID. This is what the World Health Organization has clarified. In a published statement, the organization rejected comparisons between MPOX and coronavirus, and additionally, they assured systems in place to control and eliminate the disease on a global scale. Remember, the United Nations Health Agency recently declared MPOX a global public health emergency for the second time in 2 years following an outbreak of the disease in the Democratic Republic of Congo that has spread to neighboring African countries.
Moving on and shifting focus to some other important news flow this morning, then JP Morgan & Chase has dropped the proposal to change the way it calculates its flagship emerging market bond index that would have reduced China's share by almost half. The bank is seeking feedback on potential amendments to its GBI EM index under one radical option initially floated in its annual consultation process. China's share in the gauge would have dropped to 6% from 10%. The bank has since removed the proposal and asked investors whether Saudi Arabia and the Philippines should be placed on Index Watch Positive, a precursor for inclusion.
Let's shift focus. Meanwhile, the European Union has lowered import tariffs on Tesla's China-manufactured vehicles to 9% from an earlier 20.8%. Additionally, they have also cut down the number of planned import duties to other EV firms. The European Commission announced a preliminary conclusion that the battery EV value chain in China benefits from unfair subsidization and pronounced that it is in the EU's interest to impose provisional countervailing duties on BEV imports from China. Tesla shares rose more than 1% in US morning trade following this decision.
And back home, then, big regulatory setback for the Disney RIL merger. The Competition Commission of India has flagged off antitrust concerns, with experts warning that the planned merger could face intense scrutiny, especially on the sporting rights issue. Post-merger, the entity is poised to compete with the likes of Sony, Zee Entertainment, Netflix, as well as Amazon. The CCI has privately warned both parties around their grip over rights to broadcast India's favourite sport. The body has also asked the companies to explain within 30 days why an investigation should not be ordered.
Alright, that's a wrap on all the important global stories we were tracking for you bright and early this morning. On that note, let's slip into a breather on this edition of Market Cafe. But when we return, we'll take a look at how the Asian markets have opened up. See you stay tuned. Hi there, welcome back. Let's take a look at how the Asian markets have opened up and how they're faring in trade as of now. Asia Pacific largely lower this morning, tracking Wall Street as both the S&P 500 and Nasdaq snapped an 8-day winning streak. First up, let's talk about Nikkei, because that Japan trade data that we were waiting for is out. Now, Japan's trade for July saw exports rising 10.3% year on year and imports up 16.6% in the same period. Now, economists polled by Reuters had forecast that exports would rise 11.4%, while imports were forecast to rise 14.9%. Now, in reality, with exports coming in lower than expected and imports rising more than expected, Japan's trade deficit has widened to 621.8 billion yen, which roughly comes to $4.3 billion, which is a larger figure than the 330.7 billion yen deficit that was expected. On that note, Nikkei slightly under pressure, in fact, majorly under pressure, 300 points lower for that index, 0.8% lower. And let's also take a look at what South Korea's Kospi is up to, because that also opened down by 0.2% and continues to be there. Not much happening. 0.2% lower is where the Kospi is. Australia also fell 0.3% on open and is actually building onto those losses. Almost 0.5% cut coming in for the ASX 200 as well. Let's also take a look at what Hang Seng and Shanghai are doing. And well, Hang Seng also deep cuts coming in, 200 point lower, 1.1% lower on that index. Lastly, let's also take a look if Shanghai is being able to buck this trend and well, continues to languish along with its peers. 0.3% lower is where Shanghai is. Now let's shift focus back home, because Asian markets are largely in the red. But yesterday, we closed at 24,698 on the Nifty, a good 126 point uptick coming in. But seems like it's going to be a little bit of a cool off for us, given the US handover is weak, Europe has closed weak, as well as Asia also looking rather mixed to weak as of now. 24,698 on the spot, and implied open indicating an open of 24,694, slightly lower than where we closed on the spot and 17 points lower than when we closed on the future. So rather flat start expected, but given the weak global handover, let's just see what today holds for us, Shansi.
Well, absolutely. Let's see how that pans out for us. But with welcome back. Thank you so much for staying tuned in. Well, let's take a look at some more news and updates then. An international credit rating firm, Moody's, has predicted that Indian firms will spend $45 to $50 billion on capex over the next 1 or 2 years. India's energy businesses, especially Reliance Industries, will make up over 60% of capex spending from rated local companies, and that is also something that they've highlighted. In fact, my colleague Anurag Joshi is standing by with more details. Anurag, tell us a little more about what Moody's had to say then.
Moody's has forecast Indian companies spending $45 to $50 billion over the next 1 or 2 years on capex. Now, in the note today, Moody's has singled out 2 countries, India and Indonesia, that are going to be spending more money on capex. And for India, the country's oil and gas industry, and especially Reliance Industries, which is a leading refiner in the world, will account for 60% of the capex spending. Now, Moody's also says that the corporate earnings over the next 2 years will grow at a rate of 5% per year, and this is going to, the robust corporate earnings will help companies reduce leverage. Now, this means that companies will be using earnings for refinancing and also repayment of their debt obligations, and firms in both India and Indonesia will push up capital spending, and so there will be a big boost for all the investment and all the project spending that is going to take place in India, and this will be aided by the higher capex spending by local companies.
All right, Anurag, thanks so much for taking us through those details. But let's refocus, talk about gold prices, because they continue to rise higher on hope of a US Fed lowering rates in the September policy. In fact, spot gold prices rose over 2,520 per ounce in yesterday's trading session. As of now, also at $2,553 per ounce. So it seems like there is no stopping for gold because it's acting as a safe haven asset. And these tend to do well amid lower interest rates. We caught up with Santosh Rao, Head of Research and Partner at Manhattan Venture Partners, to understand why gold prices seem to be heading towards, and if there is any more upside to this rally that gold prices have seen. Let's go across and listen in.
I think gold will continue to be elevated because the geopolitical tensions are going to go on. That's been, you have in Russia and Middle East, and that always goes on. But overall, I think the inflationary, there are a lot of fundamental issues with the US economy. The dollar is weakening. We are indebted. US market is, US economy is in debt. We need to bring that debt down. Taxes need to go up. And fundamentally, I think there are a lot of things underneath that need to be watched. And that's going to stay for a long time. So you will need that hedge for a long time. So you will see continued demand. Gold will catch a bid for a longer time because of all these fundamental things that need to be addressed. These are long-term secular issues that need to be addressed. Taxes need to be raised. Money, revenue side of the equation needs to improve. All those things are pointing towards a weaker economy if US doesn't act, if the policies don't really come into place.
You have it. So that's the trajectory that is emerging for safe haven asset gold against that lower interest rate environment backdrop. Moving on, then, market watchdog SEBI rolls out consultation paper in a bid to promote rights issue as the preferred mode of fundraise. It includes the removal of the requirement of filing a draft document and the need to appoint a merchant banker to speed up the process as well. Let's go across to Ankur for more details.
Yes, in order to make a rights issue a lucrative option for raising funds, SEBI has come out with a consultation paper on the issues which are there in rights issue. And as far as the data which is provided by SEBI, in FY24 itself, around 15,000 crore was raised through rights issue. But if you consider other options like QIP, the amount was around 68,000 crore. When the review was done by SEBI, there were different kind of suggestions which were given, and therefore the proposal says that they should do away with the requirement of filing draft offer letter with SEBI in order to reduce the timeline, and also the proposal is there that the current indicative timeline of rights issue should be T plus 20 working days from the board meeting which approves the rights issue. Now, how it will be done? SEBI will also provide the flexibility for promoters to renounce rights issue to selective investors. Apart from that, it also mandates upfront a disclosure of selective investors through public advertisements, and this should be done 2 days before the issue opening. SEBI has also mandating that it should maintain restrictions for willful defaulters and fraudulent borrowers that should be there when the final proposal is finalized by the market regulator on rights issue.
All right, Ankur, thanks so much for breaking down that latest SEBI regulation coming in. Rights issue looking to be the preferred mode of fundraise, but in a move to boost seaplane tourism and connectivity in India, the Aviation Ministry is soon to come up with detailed guidelines. Sources close to the development indicate that allocating a corpus fund to build infrastructure to give financial support to the players will be a key part of the seaplane guidelines. My colleague Samir Dikshit is joining us with more details on this. Samir, hi.
In a move to revive the seaplane operations in the country, to give further impetus to seaplane operations, government is all set to come up with the detailed guidelines for seaplane operations. And the interesting or the biggest point of the guidelines is that for the first time, government is going to allow non-scheduled operators for seaplane operations in India. So these guidelines, which has been prepared with the extensive consultations with the private players, with the players those who are interested in seaplane operations and those who have got the expertise. The extensive consultation has been done. So a couple of interesting or the important points for the upcoming guidelines will include that the non-scheduled operators will be allowed for the seaplane operations in the country. As of now, the guidelines which are there that gives permission only to the scheduled operators to operate seaplanes. For example, SpiceJet is one prominent name, but now the doors will be open for non-scheduled operators. Another important point is that government will allocate a dedicated fund for the development of the seaplane infrastructure in the country. Government has already identified 100 such places across the country where seaplane operations can be a reality, it can be pushed forward. So for these 100 identified places, government will provide a fund for building the infrastructure. In addition to this, government will also provide the financial support to the probable players, those will come forward for the seaplane operations in the country, similar on the lines of the VGF, the viability gap funding, which is there for the Udan scheme. So these are a couple of important things which will be a part of the upcoming guidelines. This is the second such attempt by government to revive seaplane operations in the country. Earlier also it was made an sort of an attempt under the Udan Yojana, but then it failed because of the financial challenges and because of the COVID impact. But once again, government is trying to revive, and we can see more players coming in for the seaplane operations in India.
Sameer, for that update coming in, let's also take a look at airfares that are flying high now. You will have to shell out 20 to 25% more for your Diwali trip in case the bookings have not yet already been made. This is because airfares have touched new highs, and the average airfare on important and busy routes like Delhi to Mumbai, Mumbai to Chennai, etc. have gone up by around 20 to 25%. So Sameer, tell us a little more about this as well then.
Ahead of the festive season, the airfares has gone up, especially on important and busy routes. For example, Delhi, Mumbai, Delhi, Chennai, Delhi, Kolkata. The average airfare, it has shoot up by around 20 to 25%, and that too at a time when festive season is still 30 to 40 days ahead. Near to the festivals such as Diwali or Onam, the airfare has gone beyond rupees 15,000, 20,000 for each seat. So the industry expert or the airline sources, they have indicated that multiple factors which have contributed for the rise in airfares. One such factor is the gap between demand and supply. So the average per day passenger flying number, it has crossed 4 lakh mark. Not just this, the supply side, the flight operations, it has shrunk a bit. For example, Go First, they shunted their flight operations, and now SpiceJet is operating with just around 20 to 25 aircraft. So the supply side, there is a challenge which has also contributed to the rise in airfares. In addition to this, the prices of ATF, the aviation turbine fuel, it has also brought in a bit challenge to the airline operators. Now they are raising the airfares to meet up the rise in the ATF prices. In addition to this, the long weekend or long holiday trend has also contributed to the rise in airfares. So these are the factors which have contributed, but the industry expert, they suggest that as the dates of these festivals will approach nearer, the rise in airfares will be much more upward side. So if you're planning to travel, then it is the right time that you book your tickets now or as early as possible.
All right, Sameer, thanks so much for joining us this morning and sharing all those details and information with us. But on that note, we'll slip into a short break, more stock-specific news and updates when we return. So you stay tuned. Hi there, welcome back. Still watching Market Cafe on ET now. Let's take it across to my colleague Ria now, who's joining us for a list of all the stocks to watch out for in today's trade. Ria, good morning. Take it away.
Yes, good morning. So let's take a look at the stocks in focus today. First up, PNB Housing is going to be in focus since a block deal is likely. So General Atlantic Singapore Fund is likely to sell up to 1.33 crore shares in PNB Housing. and the floor price is expected at rupees 775 per share, which is a 4.4% discount to yesterday's closing price. Now, IIFL Securities is likely to be the sole broker for the deal, and the offer size is around rupees 1,032 crores or $123.2 million, and the deal is likely to be completed today. Moving on though to Tata Motors, so S&P Global Ratings has upgraded the credit rating of Tata Motors and some of its wholly owned subsidiaries. For Tata Motors, they've upgraded the rating to a BB plus versus a BBB, which was a stable rating earlier. For JLR, they've upgraded it to a positive from the earlier BBB negative positive rating, and for TML Holdings as well, they've upgraded the rating to a positive from the earlier stable rating. On Tata Power as well, they've upgraded the rating of the company to a BBB negative from the earlier BB plus, and the outlook is positive there as well. Let's move on to Sansera Engineering. So yesterday in the AGM, they have approved a fundraise of up to rupees 1200 crores, and they've also approved an additional investment of rupees 20 crores in the RFIC technology. Lastly, we have Genus Power Infra. They've won 3 LOAs worth rupees 3,608 crores for the appointment of advanced metering infrastructure service providers, including the design of AMI systems with the supply, installation and commissioning of FMS of about 4.26 million smart prepaid meters and system meters, and with this the total order book of the company now stands at rupees 28,000 crores.
That update coming in. So there you have it. That's the list of stocks that you should be watching out for in trade today. But we also have Varun who's standing by with the list of what brokerages had to say bright and early this morning. Varun?
Okay, good morning. So the first report is on Avenue Supermart, and UBS is having a buy rating on the stock with a price target of 6,000. They have done some store visit, and the channel check suggests that there is a strong demand for their products. The footfalls are strong versus mid-teen sales growth that was seen in July and starting of August. The focus is increasing on private labels, and the overall demand is very strong. The next report is on Varun Beverages, and BofA has a buy rating on this stock with a price target of 1840. They say this is a preferred pick in FMCG or Indian consumer space, and the fundamentals remain very strong. They see good visibility of outside revenue earnings growth of 20% CAGR, better than most of the peers. Earnings growth should support stock valuation, and they see a pullback after Q2 results. It is an enhanced buying opportunity. Also, you have a report on SJVN, and Goldman has a sell rating, although they have increased their price target from 75 to 85, although the price target are tad below the current market price. They say that a potential RE monetization in FY25 can be a trigger for this company. Buxar thermal plant delayed further has been a point of concern. Continuous slippages in large project commissioning to lead to consensus earning cuts. This reward is unfavorable, and that's the reason they have a price target of 85. Currently, the stock is trading at around 140, but yes, they have increased from 75 to 85, retaining a sell call.
Thanks so much for joining us with that list of what the brokerages are flagging off for us this morning. But we also have Ansh now joining us to take us through what the FNO snapshot is looking like for the day, what are the levels to watch out for, and what FIIs did in trade yesterday. Ansh, take it away.
Yes, so FI and index future, we saw that they have added around 8,400 long contract. They have also covered 18,000 short contract, due to which we are saying there was an addition of around 26,500 contract on upside, due to which the total long position has inched higher to around a bit more than 50% at around 52.4%, and we have been hovering around this 50% from last 8 consecutive sessions, indicating they are getting a bit of a neutral sentiment in the market actually. Now, if we talk about Nifty, then this is interesting. Nifty has been advancing for 4th consecutive session, and the gap it formed on 5th August has been covered currently. So this indicates that all the bearish sentiment that we saw due to that gap down is covered now, and we can expect some good positivity in the market. Also on option front, we are seeing call buying happening at a 24,700 strike, indicating option traders expecting Nifty to stay above this level, whereas we are seeing strong put writing happening at the very same level, indicating that option traders are not expecting a fall below this level. Now, if you talk about Nifty Bank, then index seems to have given a slight breakout from that consolidation pattern, which is again a positive sign, but we need to stay above that 50,700, 800 mark to continue having positivity in the market. Also on option front, we are seeing some put writing happening at 50,500 strike, indicating very good support base around this level. Lastly, let's have a quick view on few FNO stocks that are in focus, and we are seeing significant long build-up happening in SBI Life, ICICI Pru, and HDFC Life, where short build-up for United Breweries, Bharti Airtel and PVR Inox. So keep an eye on the stocks.
Well, absolutely, Ansh. Thank you so much for that roundup. We'll be keeping an eye on all of those counters, but we also have some important commentary for you. We caught up with Mahesh Patil of Aditya Birla Sun Life AMC to understand the road ahead for market fundamentals as well as the sectors that he's keeping an eye on. Listen in to what he had to say then.
This year, at least, rural should come back. And monsoons have been fairly good. I mean, initially they were a bit late, but I think they have caught up. So I think that should not be such a concern. Rural, again, wages also, right? The real wage growth, which was negative, is now turned slightly positive because inflation has come down. So I think all these bodes well for pickup in the rural economy, though it's still very, very slow and gradual, I would say. I mean, if you look at really to play the rural, it's basically consumption is what you're looking at, right? And broader consumption, which has been kind of lagging behind. I mean, that has lagged the recovery since COVID. I think we should see some catch up, and really to play that, one can look at the consumer staple names, consumer discretionary also. I think consumer durables, even the auto names, for example, right? Where autos is still weak. I mean, two-wheelers. Last year we had a reasonably good growth from the bottoms over there, but still it is lower than the almost near to the earlier pre-COVID peak. So there is some amount of room there if rural economy really picks up over there. So I would say consumer staple, consumer discretionary, consumer durables, auto sector could be the sectors, okay, which one can look at really to play the whole consumption theme.
Mahesh, so where are you picking your spots in this market? Defense, railways, banks, where are you picking your spots in the PSU space?
So specifically on the PSU side, if you look at it, there I would say the power sector, for example, the utilities, okay, where I mean, especially in the power side, power generation and power transmission and distribution side, there has been clearly an uptick in terms of revision in the targets, right? What has been said earlier. So that clearly opens up a better growth opportunity in that sector over the next 5-year time frame. And while the valuations are on the higher side, but in compared to the historical average, but in absolute terms, they are still reasonably okay to really look at that sector. Also in the power sector, the energy space, right? The oil and gas sector has performed well, but not really done as well because especially the OMCs, where last quarter was kind of weaker because of the lower refining margins. But I think where the oil is now positioned and with oil prices remaining lower, I think you should see a good on the companies making good on the marketing margins. So I think the oil and gas space in that space is also looking fairly reasonably priced at this point in time. So I think these are the sectors. I think in the defense and this thing, while the outlook there continues to remain fairly strong over there, I think one would wait for some kind of a moderation because we've seen some execution slackness in the last quarter. And that could, if there's any correction, I think then it could be a good entry point to look at some of these names on the defense side.
Mahesh, we are getting mixed signals. Ajay asked you about rural economy, but I have data from the auto sector which talks about discounts have come back, waiting period is over. I look at toothpaste sales, they are going up. I look at hair oil sales, they are going up. I look at two-wheeler sales, they are going up. Also, the data seems to be very similar. So why are we seeing such a reversal? Rural is suddenly back up and urban and semi-urban is taking a backseat.
Yeah, I think so. I think we saw rural. I mean, the urban recovered. I mean, last year, the recovery in the urban was much stronger, especially in the upper segment of the urban population. So the demand for higher-end goods, right, and the premium products was very strong. I think there is some amount of kind of a fatigue or saturation probably creeping in over there. I think the initial buoyancy, what we saw last year, okay, I think to that, I think there is some kind of a normalization over here. On the other hand, on the rural, the bottom of the pyramid, okay, which was really weak for the last 1.5 years, I think that is seeing some green shoots because there the base is also kind of favorable if you look at for the last 2 years. So I think it is more about some kind of a mean reversion of that, okay, where the urban and the upper end of the segment, which was doing very well, is kind of normalizing, and the bottom end, which is kind of weak, is again trending back towards the mean. I think it's more of a normalization trade is what I would see.
All right, well, on that note, let's step away from markets, take a look at everything else that's been happening outside the world of markets and globally. The deal to bring an end to the fighting in Gaza may collapse. This comes just day after when Secretary of State Antony Blinken urged Hamas to accept a proposal for a Gaza ceasefire and hostage release deal after announcing that Israel had accepted the plan. Well, Morgan Stanley International Chairman Jonathan Bloomer is among those missing after a yacht carrying UK tech entrepreneur Mike Lynch sank off the coast of Sicily during a violent storm. The vessel sank on Monday, killing one of the 22 people on board after its mast broke in half during the storm. And well, Sunita Williams and Butch Wilmore may get vaporized, says US space system expert. There will be catastrophic risks of returning in faulty spacecraft. NASA astronauts Sunita Williams and Butch Wilmore were unexpectedly stranded on the International Space Station due to a malfunction in the Boeing Starliner's thrusters.
Moving on to some more news and updates, Prime Minister Narendra Modi is all set to visit Poland today and later Ukraine on August 23rd as well. In addition to talks with Polish PM Donald Tusk, PM Modi is also expected to call on President Andrzej Duda. He will also interact with the Indian community, business leaders as well as prominent Indologists there as well. Moving on then, India is set to witness widespread protests today as the Reservation Bachao Sangharsh Samiti leads a Bharat Bandh in response to the Supreme Court's recent ruling on reservations. The protest, which calls for the reversal of the judgment, has garnered significant support across the country, highlighting the contentious nature of the court's decision.
Well, on that note, it's a wrap on this edition of Market Cafe. Thank you so much for watching. But as we bid you goodbye, you don't go anywhere because the market takes all the action forward.
If you like this video, then like, share and subscribe to ET Now.